All right. Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for April 14th, 2022. All right. Let's start with the market health check today. So today we had a slight, if actually negligible gap, and then it sold off to give back everything that it gained yesterday. It just gave right back. It stayed within that same yellow zone, an inside kind of day. So this was a nothing, and it's as far south now of the Bollinger Band mean as it was above the day before. The 3-period hull is slightly up. The Bollinger Band is slightly up, so that's good. But the slope of the dragon is decidedly down. The RL10 price slope is down. The PSAR is down. The RL30 is down. So all of the longer term measures of price momentum are down. Only the short term, these last 4 days that have been kind of basically sideways choppy, and now it finished up in the bottom of that box. So we're very close to that breakdown of the 10-period low at around 436. So any breakdown from there is dangerous. Then we would see a move to Z1, the 10-day low, the 30-day low. I'm sorry, the 30. This is the CD off of the RL10, and then here's the 30-day low from way back here. So this really is a critical state, this little shelf that we got setting up right here of support. If that breaks, there's nothing that holds this from a big move all the way down to like 418, which is about a minus 4% risk. So we're at about 9% off the swing high to close here. And we're a considerable distance away from that peak of the dragon and the PSAR flip right around 455. So it has a long way to go to get out of this tactical zone. Has to get through that yellow zone, through the dragon, and then up above the RL10 before we have any kind of real confidence in the long side here. So this is really problematic right here. This can go either way large. All right, so we have the S&P at minus 1.25, emerging markets at 1.3, treasuries and the Qs off 2 and 2.3%. That's really sad face there. Slightly better was the Russell at minus 1%. And the Dow was the best performer of our 6 primary indexes at minus 0.43, but not much to choose from there. All right, let's take a look at the sectors that outperformed. So we had finance and lithium off between 1 and 1.13 and 1%. Brazil and agriculture off a half. Materials, lumber, staples to basically minus 0.03. That set up the the cut line between the losers and the winners today. The things that actually made money: wheat and precious metals, the other lumber, Simon Property Group, oil exploration and energy, between 0 and up to 0.3. Blended commodities, oil and the VIX up 3/4 to 1.5. Targets that worked. Another strong day for the metals of U.S. Steel and Alcoa. And that's it for direct symbols. Underperforming sectors. So we've got Mexico and marijuana off 1.5 to 1.75. You got tech was off 2.4. Blended large cap commodities, biotech, clean energy off 3%. Blockchain, moonshots, Bitcoin, the FANGs, Ethereum off 3.5. Global future of finance off 4%. Arc Genomics 4.1. Arc Innovation 4.4. And then individual companies that got smoked. Bakkt and Coinbase off 4.5. Robinhood 4.25. Squarespace, Cliff, and Tesla 3.5. So Tesla closed back underneath the key price level of 1,000. Tomorrow's got to be the day that it has some gains. Apple off 3%. PayPal and Microsoft 2.75. Devon Energy 1.87. So this was really a bad day. I mean, this was a sad face day altogether. No, nothing good here. All right, let's take a look at the reports. Back into bullish normal conditions with really disappointing 2-day and 10-day. Risk C is now out of the abnormal condition. It's now just risk on and neutral. So there's still some upside. And the excess above that Z1 has been blown off. Now it's here in the normal range above the zero line. Caterpillar, ExxonMobil, Chevron, Coke, and Walmart in the min pains. Max pains, all of the techs, Tesla, Microsoft, Cisco, and Intel, plus JP Morgan in finance. A handful of dojis today. Plenty of auto framers to choose from. 15DD here in JP Morgan, which was at 3.6 to 1. And you can see just how horrible JP Morgan has been. It's on a 4 on the RSI 2. That's key. And it's been underperforming just about in every dimension. Microsoft is on my short list as a mover in either direction. Intel as well. So those two bellwethers both been underperforming significantly. And Apple. So all the conventional techs getting smoked as well. No flight to quality there whatsoever. In the ETFs, a ton of auto framers, as you can see. You can see the weakness in clean energy and the Qs. This is the one that surprised me. The treasuries are just rejecting any sign of strength. Metals and mining and oil exploration, energy itself, and oil. Just read the leaves. Lots of auto framers to choose from. Of course, we're looking at the ones that are above 2 to 1. And we're looking at the framing data for them here to set up the mechanical entries. And I read this, as I've said before, from the top down, looking at the reward to risk ratio. And the ones that have the biggest reward to risk ratio are the ones that are the furthest away from their 10-day high. Why does that matter? Because it frames in both directions. Basically, it if you get the 10-day high up here and this thing has, sold off from the 10-day high down to this little daily range here, and you set that up as your range risk. That's this range risk, which is yesterday's range plus or minus 5 cents. So that sets up range risk. And then the reward to risk ratio is computing back to the 10-day high, wherever that is, which is this column here. And so a 4.7 to 1 means that of this range risk, there's 1, 2, 3, 4 plus a 0.7. And that's how you get that 4.7 to 1 on the basis of range risk. Now, that's a nice rebound if it's going to go retest the 10-day high as a reasonable upside profit target. The downside profit target, though, is you say, look, there was something, I don't know what, that caused this thing to sell off. What was it that made it get so weak so fast? And then if that's still in play and this breaks below that low, then it's clearly more of this. And then the size of that move could be like that. So I take this as leg 1 and that is leg 2. And that allows me to compute this kind of symmetrical move, if you will. So I basically just look at, I look at this as a critical state with a favorable reward to risk ratio, which tells me what that reasonable move is. And then that implies a move of that size. So I don't care which way it goes. Now, as long as it stays inside yesterday's range, I think of that as the yellow zone in here. So I don't have a directional bias until it breaks out of that range. If this range is large enough, I might be able to play between the high of the day and the low of the day on an intraday trade. But I'm really interested in it if it breaks out above that line or below that line. And then I can compute those reward to risk. It's not until it leaves this range that I have an indication of a directional move. As long as it's inside yesterday's range, it's just noise. It's just noise in here, okay? So that's why I'm interested in these starting from the top down, and I read down the list based on reward to risk ratio. The daily squeezes, this one, again, is based on the idea that these symbols have something like a normal range, whether they're going up or down, it doesn't matter. It has something like an average range. And then if today has a compressed range, then this is focusing all that energy into this little coiled spring. And so we set that one up as a directionally neutral move. We just say, look, if it breaks out above yesterday's high, then all other things being equal, that tension that has been built up by this coiled spring, maybe that's the first sign that this thing that opens in here is resolving to the upside. So we would buy that with a stop down here. Conversely, if it opens inside that range and then breaks down, then we're seeing that coiled spring is resolving to the downside. So if it just makes a range stat move, the maximum reasonable intraday move, and we use the daily risk as my risk, this report highlights those that are better than 2 to 1. So if I get a range stat move and I use my risk, here's one that is like 3 to 1. If that was my risk and it breaks to the downside, that would give me a 3 to 1. So Traveler, Chevron, IEV, these are all symbols that give you favorable range expansion on the basis of today's compression compared to the average normal moves. So we like that. And then I've highlighted these 4 frog champions that I like to trade all the time anyway, especially when we're in bear markets or sideways markets. I start with the range min, and I take 1/4 of that, and I use that to compute the size of the minimum manageable risk box, MMRB. So that gives you the opportunity to trade swing trading one day at a time. It's a hybrid technique. Still a lot of things in the fall. The usual suspects among the industrials and energy and metals and mining and discretionary that are in the green on that multi-time frame NDX. You can see this just marking time, waiting to see which way this thing is going to break. Critical state right there. Does it resolve to the downside back to 420? Or does this thing resolve to the upside back to 460 before it tests? So that's kind of the zero state breakout in either direction, about a $20 move, which is about a plus or minus 5%. And then those would test support, and that would test resistance for a second leg, also of $20. So just on trade location and support and resistance, we can start making those frames. The fact that this is already rolling over, the slope of the 30 is rolling over at more than one standard deviation to the upside. It feels like that, and a sharp rollover here would take us back to 420. And you can see if you take this last 180 days and zoom it down to the last 30 days, you get the same chart, but it's just a little bit easier to see. Okay. This is the slope of the RL30. This is the RL10. I mean, the moving average 10 of the SMA 30. So it's just a slowed move, a smoothed move. All right, that's everything we got. We'll take a look at the traders, see how they're doing. For those of you just tuning in, if you go to tortoisecapital.net to our homepage, tortoisecapital.net, you'll see a handful of briefings from the recent Tortoise Research Group and the live research weekend. Danny's work with the options and the TC 2000. These briefings here from Ken and Luke and Bill and Glenn are just some amazing work on systems. This is Phil Wu and Griff Cooper, who were using the Cornell note sheets to capture lessons learned from the FAQ sessions from the hybrid trading and the swing trading, and Tom Hardison's work on the alchemy of building teams, as he does a lot of consulting with CEOs that are trying to build high performance teams. And he has some great things to say about the use of true storytelling in the way that we build teams of reliable, trusted partners. And these are all part of just this year's work on the research group. So you can find all that at tortoisecapital.net, along with a bunch of other goodies down here that'll give you some insights into what we do. So tortoisecapital.net. That's like command central for us. Over on the right-hand side, you'll see some other services we offer: the day trading, Forex, swing trading courses, the TC 2000 bundle, trade station bundles, brain pathways instrument as well. So just want to make you aware of that. I want to take a look at Tim's work next. I asked him from last night. He showed us a markup that had his first 100 trades forward tested. I asked him to break that into two sets, and let me start with the first 50 was him getting his feet wet and finding his balance. And he had some initial successes early, but his rolling average R decayed. There was some evidence of learning challenges as he was learning the patterns and learning to interpret and trying things on. He had a reasonable distribution. What I was pleased to see was he had nothing worse than 1R, so he was very strong on risk management. But then I want you to notice that kind of his average loss was around a half, and then the average trade was right around 0, and then his exceptionally good trades were around 0.5. And that gave him a slightly negative expectancy, and he was pushing it hard, and he had a higher loss rate. He had 23 losses, 17 wins, so that's a 46 to 34, and the average gains and losses were about the same. So that's a negative expectancy system in the first 50, but there were a lot of positives, and that was strict risk management, nothing worse than 1R. This after a series of nightly coachings, the second set of 50 now looks like this. Essentially, and as we said last night, essentially, what used to be the negative losses have kind of moved up to scratches. What used to be scratches have moved up into this region, and now he's got a lot more payoffs in the better than 1 range. So now on his next 50 trades, he's turned his win rate around to now 4 to 3, and his payoff now is from 3 to 2, which now gives him a positive expectancy. And the last 3 or 4 days has really resolved in his favor on the basis of he's not taking those full 1R losses anymore. Those things are starting to prune to the upside. He's still got a nice histogram going. So now the 1R winners are happening frequently. They are not an outlier anymore. And the average winner to loser now is a 3 to 2 favorable ratio and a higher win rate than a loss rate. And before, the 1R winners were 1 standard deviation above the average. Now it's nearly the average winner, which was 0.92. That's a huge improvement. And now the exceptional high winners are now shifted towards 2R. And so he's got to work on trimming those losses, I think, from a minus 0.5 to aim for minus 0.4, and minus 0.3 is about where he wants to be on the average, I believe. But this is evidence of actual learning that he's cut that down, and now he's resolved this to the upside. He's got like a kata 2 formation on his rolling average R and on his equity curve. I don't want to jinx him, but this is evidence of learning, evidence of skill. Here's Griff with the kata challenge. Oops, sorry about that. So we've got this, there's your PSAR flip. He waits for the break of the Bollinger Band mean, nice, tight, strict capture, re-entry, capture, good effort long side, cuts it, quick loss, quick gain, quick loss, paid off, a win, these scratched, good win, good win. So 3.1 to the upside. Nice work. This was the Kata 2 only, so you saw those on the previous ones. I'll let you just study that at your leisure. You should be studying these. And that was from the SSC portion of that only. You can see the relative size of the MMRB, how he's able to shave down what was normally our risk box and our directionality box from a frog box down to the MMRB. So that's a good thing. Some quick frames from Glenn. Here's Caterpillar. So he's got the nice tight frame on the weekly. It has cleared this, so there's no resistance in here. And so the next target would be 240 and maybe the top of the dragon here, just about 238. So that's about plus 15 to the upside on about a $2 risk. That's like 7 to 1. You can see that in here. That's a really nice strong move that has cleared the deck. And the strong move pulled back and is now holding inside of this range right in the middle. So a breakout or a breakdown are likely to be strong moves. So that looks pretty good. Just what we want to see. ADP. Is testing the top of the weekly, which has rolled over to here now. So you have about a $10 move to the top on about a dollar risk, and then the big breakdown just to the edge of the dragon. So you have a really nice weekly channel to operate in. And the fact that this broke down so dramatically now suggests that if this breaks at all below here, you want to be on that one fast and take advantage of the quick, harsh sell-offs. Notice how sharply this fails when it fails. And there's a lot of folks that'll be motivated sellers in here because they're trying to preserve the gains they made. So if this starts failing, you'll see a rush to sell as people try to lock in their gains from the hard work. So that actually promotes harsher selling right from the beginning. So you want to be ready for that. And conversely, the upside makes this feel now, if this were to move up, this would feel like a Kata 2 in here. So so you would be ready for this recovery to here. And if that works, a second position on the move up to 238. So good frame. Here's a JP Morgan in the finance area. Big collapse once more, just like Goldman was bad. So this could roll over easily. Otherwise, that's going to be an SSC. It won't stay there. It's going to make a big move one direction or the other. And that one and Goldman are both in that kind of posture. Finally, Wojcik scratching today. Mostly just, this was not a lot of wins and losses that neutral. This was just a lot of little false starts and a very tight range and no follow through until the final moves of the day where he actually was able to pull back and pay for the day. So there just wasn't a lot to get from that at all today in the Aussie. Let's see what we got here. Glenn put a couple more in. Treasuries and Oxy. Occidental Petroleum. That strong move up has pulled back just a little bit into this zero state. And that would be the move to the downside. That's the move to the upside. Nice tight risk box of about 70 cents and ready for a breakout either direction. You can see how if these break, this thing's going to drop to here pretty fast. And you really have to see it get above 62 before you get that second position on. And now the last one is this treasuries. Yeah. Yeah, this treasuries move, boy, that is just changing the world right there. Wow. Painful. Might get back to 123 tomorrow, but that's going to be a sharp move, as getting a lot more attention right now, I'll tell you that. The risk-free rate of return. All right, that's everything we got for today. We'll get this published and processed. Thanks for hanging in there. Tomorrow, bring a nice conclusion to the week, and off we go. Take good care.